Okay, the GST, I'll just read, don't worry. The GST Act has 4 tax rates, 5%, 12%, 18% and 28%. Of course, there are 2 more for gold and precious stones. These are the normal ones, okay. And there are, okay. Certain goods and services are exempted from the GST or taxed at a lower rate, okay. So, we will talk about that, which are the goods which are exempt, which I have already, shared, but I will just talk about more in detail about them. Now, if you are a business person and you are registered, you are entitled for ITC credit. So, we have already done a question, okay. So, registered businesses can claim credit of for the GST paid on inputs used in production of goods or services. This helps to reduce the tax liability of businesses and prevents the cascading effect of taxes. So, that means the taxes become basically simply the pass-throughs in terms of the change of businesses. Only the liability goes up on account of value added by the respective intermediary. If it's a producer, then it goes to wholesaler, then goes to distributor, then goes to retailer. So, everybody is adding some value, so tax liability will go up, okay, fine. But it will go as a pass-through. So, whatever tax which has been paid by someone, the other person will take the credit, and on his value addition, he is going to deposit that tax with the government, okay, after using the input tax credit. So, there is a reverse charge mechanism where normally the supplier pays the taxes. The person who is providing the services, he has to pay the tax. The customer doesn't have to pay the tax to the government, okay. But in this case, a reverse charge mechanism, the customer or the recipient of the goods or services, he is required to pay taxes. We will discuss that more in detail, though we have discussed, but we are going to go into this a separate lecture on that, which I will cover later. So, then there is some composition scheme. So, for all those small businesses, they can avoid all kinds of various kinds of returns and comply with all the rules and regulations. They have to have a minimum compliance. So, small businesses with a turnover of 1.5 crores can opt for composition scheme, which allows them to pay a fixed percentage of turnover as a tax. So, they have to pay just fixed, like 1% or 5%. So, for various kinds of people who are doing business, some different rates have been given for the person who is having a turnover of less than 1.5 crores. Okay. Now, this is very important. Okay. But for composition scheme, suppose you happen in a state like Uttarakhand or Northern, then the limit goes from 1.5 crores to a little lower amount. So, we are going not discussing at that amount. Okay. So, this is very important. Electronic way bill. Okay. This is kind of an anti-evasion tax measure, that anybody who is going to supply goods to someone, he has to generate an electronic way bill through the GST portal. It can be done from your mobile also. Whenever you buy goods from someone, or a businessman buy goods from someone, or he is supplying the goods to someone, he has to make an electronic way bill. It is only applicable for, I think, for goods only, not for services. So, the GST Act requires the generation of an electronic way bill for the movement of goods worth more than 50,000. So, if somebody is supplying goods above 50,000, he can't supply it like this. So, he has to raise a electronic way bill. Okay. So, this will curb any black sale or somebody who is not informing that sale to Transaction can be made in cash, but if the goods are moving on the road, then they have to move through the mechanism of electronic way bill. But if you are taking those goods in your car, then of course you can still do that, okay, without bringing to the notice of the tax authority. So, we will talk about what are the goods or where it is exempt. Okay, fine. So, there are a lot of exemptions also given. Fine. So, we will talk about that. So, an electronic, Ananya, Radurpati, I think his voice is a little bit suppressed, so you can read.
An electronic way bill, e-way bill, is a digital document that is generated online for the movement of goods worth more than rupees 50,000 from one place to another within or across states in India.
So, because when this act came, so it was replacing all other taxes which were there earlier. So, the motive was the government was to ensure that everybody pays taxes, okay, so that the taxes can be brought down. Okay, nobody escapes the taxes. Fine. So there are a lot of measures which have been adopted by the government, and this is one such measure where all the goods which are moving, they have to be supported by an electronic way bill. That means you have to go to the GST portal, or on your mobile you can raise it. It's as simple as that. Yeah.
The e-way bill system was introduced under the Goods and Service Tax regime to facilitate the seamless movement of goods across the country.
Is that okay? Okay. Malaika, any question? आपके पास होता है कुछ ना कुछ? Okay. Fine. Read.
The e-way bill contains details such as the name of the consignor and consignee, the value of the goods, the place of origin and destination, and the mode of transport.
So basically, the e-way bill has to give all the details. You know how the goods are moving, from which place the goods are moving. Okay, the consignor and consignee, the value of goods, place of origin and destination, where the place is, from where it has moved to which place. Okay, and the mode of transport is by road, this thing, car, whatever. It is, yeah.
It is generated on the GST portal or through SMS, and a unique e-way bill number (EBN) is generated for each bill.
So it can be done through the GST portal, or simply you can send an SMS through the GST portal. It will automatically create this kind of a so it's very simple. So it's not like the business people can complain that this is another kind of provisions they have to follow. So okay, yeah. Next.
The e-way bill number is valid for a specific period, depending on the distance to be covered, and can be used for multiple modes of transportation.
Okay, so there at the back, some people are talking. Fine. Other day I was teaching in some there were 60 students, and they were not allowing me to teach. Okay, so they were all crisscross talking to each other. So I told that when I go to Shivnadar, I don't find this problem. Whenever I go to IAFT also, I don't find this problem. But I'm finding this problem in this particular college. Okay, so I give the example of you. Then people at the back are talking. There, what's your name? Please listen. If you don't follow, please ask me. Okay. So this will get recorded. So when they hear to this thing, so they'll say you were just complaining. There was some kind of issue there. So I'll just delete this part of the recording. I deleted it from there also. Okay. Okay.
The e-way bill system aims to curb tax evasion by ensuring that goods are not transported to buyers, transporters, and other stakeholders with ease.
Okay, so this is all self-explanatory. There's nothing to explain here. Okay. So what is the purpose of this, this thing, e-way bill? So what's the purpose? I'm going to ask you. Yeah, the man with the specs. क्या purpose है e-way bill का? What is the purpose? Why government has started this e-way bill? This is what Ananya, Nirdhi is going to tell you. Yeah, Nirdhi.
So basically, it's systematic to curb tax evasion.
Yeah.
Proper documentation.
Okay, so don't blame me if you don't get a good grade. Okay, so only 30% students are going to get, or lower, or maybe 35. So you can be one who will be out of this thing purview if you keep talking. Okay, what's your good name? Tejas. Huh? Tejas. अपना ही नाम है ना आपका? Okay. Okay, under GST Act in India, following entities are exempt from raising e-way bill for the movement of goods. Okay, so these are the entities which are don't have to raise an e-way bill. Okay.
Depends on certain public sector undertakings.
Okay, so when the goods are moving through a bullock cart or a hand cart, so these are exempt from the GST, this e-way bill. Transport of exempted goods like milk or fresh milk, fruits, so they are exempted from the e-way bill. So they are goods move under the custom supervision. Whenever when goods arrive from outside the country, so they either have to be cleared immediately, okay, or they can be put in a bonded warehouse. Okay, like suppose if you think that you are going to clear it after some time because you have to pay the duty, isn't it? So the goods have come to India, and you have to file a bill of entry. Are you aware of that bill of entry? Naam suna kabhi? Okay, so there is something called bill of entry. We have to file it. It is filed by your agent, okay, clearing agent. Earlier it used to be called CHA, Custom House Agents. Now the name has been changed. I don't remember the new name. So these people are filing a bill of entry, saying which are the goods, giving codes of the goods, everything, how much custom duty is payable, okay, and then you pay the duty and you can allowed to clear the goods from out of this thing. Okay, let me just complete, okay, and then you can talk. So now, if you don't have either money, Or you think, like, what happened way back, today is the budget day, isn't it? So it was almost like a week before budget, and we received a lot of goods from either Germany or Australia or some, I don't know which place, when I was working in Grasim. So my boss called me, he says that likelihood is that the duty will come down. So what should we do? Should we, clear the goods and pay the duty immediately before the budget, or should we wait? We'll be entitled for, if the duty is lower, then do we have to pay the duty, a lower duty, or we have to pay the higher duty because the goods have already landed or they're about to land. So then we immediately, read, there is a called Handbook of Procedures of Imports and Exports, which is issued by the Director General Foreign Trade. That's the first time when I read that book, and I found that you can store it in a bonded warehouse. Okay, and you can, get it cleared after paying the rental and all. So that time when you are clearing, the whatever duty is available, applicable, you have to pay that duty. Okay, if you expect now that, on that day, on that particular year, what happened was the duty came down half, from 50% came to 25%, and we saved a lot of money. I don't remember how much. So we had immediately bonded it in the Bombay, this thing go down, the bonded warehouse. Okay, so we file a bill of entry for bonding. Okay, so this is written, it's for bonded warehouse. So then it will go and put it in the bonded warehouse. So there are a lot of bonded warehouse in, Mumbai, I don't know, I was just remembering, I forgot. So there is one bonded warehouse where we park those goods and clear them after the duty was announced and the duty got lower. Okay, so still that law exists. So you can always lower your duty if you think the duty is going to come down. But those days duty was coming down. We had a very high tariff walls. So the government was bringing the duties in every budget. But now they have been at so low that there hardly any chance that the duty will be brought down. But there are always occasions where the government decides to lower the duties on certain things like mobile or laptops or something. So you have a consignment, you can just hold it on the bonded warehouse and clear it after the duty has been announced. Okay, so goods moved under the customs supervision, then no electronic waybill. The movement within notified areas, some states exempt. Okay, some states have exempted from this, and some defense movements of goods. Okay, armed forces and other things. So they are not applicable. Then empty cargo containers. So they are also not coming under this thing. Consignment value below 50,000. So that is we read earlier. Then railways and airlines. Ananya, can you read this?
Railways and airlines could transport it via rail by Indian Railways or air flight under specific conditions.
So under specific conditions. Okay, so we'll talk about that, or we can just find out. So what are those specific conditions? Special economic zones, SEZ. Have you heard of that? So there are certain special economic zones where you put your plant there or you invest your money. So there are a lot of benefits which the government gives. You may have, total tax holiday, or you may get, a GST holiday or something like that. So there also there is a transit cargo. So the goods are moving in a transit. Okay, so goods moving to these countries like Nepal and Bhutan. So there is this thing. Okay, so Nidhi, now you are going to read. Okay, read this.
GST Council is responsible for making recommendations on issues related to the GST, including tax rates, exemptions, and procedures.
Okay, so GST Council can all make provisions with regard to what goods are exempted, where how much tax is going to charge, what are going to be what are the procedures. Okay, so this is the negative list under the GST. Okay, items that are not covered under GST are called a negative list. Also, these items are notified under the Schedule 3 of the CGST Act. The following items are on the negative list under GST. Okay, Nidhi, continue.
Services by an employee to the employer in the course relation to employment.
So, when a person is working as an employee, he is providing services. Okay, so employer-employee kind of relationship, there is no GST. Okay, fine. So the employees don't charge GST to the employers. Okay.
Services of funeral, burial, crematorium, or mortuary.
So here also, funeral and burial, this thing are under exempt. Sale of land. If you purchase a land and sell land, then there is no GST on that. Okay. So this is coming under, only few items are exempt. Sale of land and purchase doesn't fall under GST purview. Sale of completed buildings. Even if the building is complete, if you buy a building from a developer and he says that you have to pay a certain amount, and then on a progression basis, he is going to charge some money, that will fall under the GST tax bracket. But if you buy a completed building, okay, now there have been a recent amendment which has happened, just recent, okay. I haven't gone through, so I'll just share that later on. So some change has happened, so I'll share that. So if you are buying a completed building, like suppose a developer, he has made a multi-storied building, and 10 people had applied during the process of under construction, and 2 people have applied after the building was complete. So those, the first part we have to pay tax. The person who has bought a completed building, he doesn't have to pay tax. So this was an anomaly. I think that has been plugged out now. Okay. Sale of completed buildings. So Ananya or someone here, all the 4. So sale of completed buildings, note down. Just study and see what new law has come under the sale. Okay, and share it on a WhatsApp group in next 2 or 3 days. Okay, fine. I'll also do that, but it is just a month back where the law has changed. Okay, fine. Or anybody who happens to come across any change, this thing, so they can all share that on a WhatsApp group that this has happened. So as per my slide, it says sales of completed building are outside the GST purview, but they have been brought under GST. But though I tried to search in a day or so, but I couldn't do it. But I think it may require some time. Go to AI and find out. Actionable claims, okay, other than lottery, betting and gambling. So they are also out of the, what are actionable claims? An actionable claim refers to a claim or a right to a debt, benefit or money that a person can legally enforce through a court of law. For example, if A lends 50,000 to B without security and B fails to repay, A has an actionable claim against B. Okay, so you can go to the court and claim. So if all these transactions which are actionable claims where somebody has not paid, okay, some money, then those are outside the purview of GST. Okay, so because might be that GST is already paid when the goods are sold, or the money was due. So maybe that this was just purely a transaction where somebody paid some money to other one and he has not failed, and you have gone to the court and you got it. So there is no GST on such things, and there should not be. Okay. Then services of any court or tribunal. Okay, so you have to, when you file a case, you have to pay certain court fee and other things. So these are also exempt from the GST. Functions performed by MPs, MLAs, etc. Okay. Duties performed by any person who holds any post in pursuance of provisions of the Constitution in that capacity. Yeah. Sorry.
So those functions by MP, MLA, they have to be like public sector, like functions done for the public, right? Maybe a rally or something. They can't be.
You're talking about functions performed by MP, MLAs?
Yes, sir. They
Yeah.
can't be personal functions, right? Like if I'm going to personal.
This has to be for the public only.
Like a rally or.
Yeah, absolutely. So those kinds only. Not that he's performing any service or anything which is not related to his constituency or something. So we have to just go through the details. Only those will be exempt. Okay. So what is a non-taxable supply? Just read it, Ananya. Nidhi, sorry. Nidhi.
Non-taxable supply means the supply of goods or services or both, like petroleum crude, high-speed diesel, motor spirit, that's petrol, and natural gas, aviation turbine fuel.
So these are the things which have been kept outside the purview of the GST, like liquor, or petrol, spirit, aviation fuel, natural gas. So these are the things which are not falling under the GST purview. It has been kept like this because the the government, when they wanted to introduce GST, so there was a lot of resistance from the states, because they generate a lot of revenue from these items, and they never wanted to give authority to not to collect tax on these things. So only these things were left outside because they constitute almost 30 to 40% of the revenue which the state collects directly. So they agreed that we are ready for GST, but not ready to tax these goods under GST. Okay. So further, Nidhi. So now these are the goods. Okay. Anyway, no read. So petroleum, this thing, high-speed diesel, motor spirit known as petrol, natural gas, and aviation turbine fuel. So all these are outside the purview of GST. Now, if they are outside the purview of GST, which means that anybody who's using these goods as a raw material or as an input, what will happen? He is going to pay a excise duty, which is the old system of taxation. Okay, fine. He has to pay excise duty. So that excise duty, he can't take that as an input credit from his output supplies. because he is not paid any GST. So what will happen? It will become part of his cost. Either he is going to reduce his profits, or it's going to pass on to the customers or the consumers at a higher price. Okay. So this is the sore point. So because it is adding to the cost of the manufacturers or the people who are making use of these products. Like diesel has been very commonly used by many companies for producing power. They are diesel fired boiler. I mean. DG sets they are using for making electricity. So they consume diesel. Okay, like one of the company where I was working, the total cost of the input was around 20% on account of diesel. Okay, so that will add to the the cascading impact to the taxes, and those taxes has to be paid ultimately by the ultimate consumer rather than absorbed or become a pass through in a chain. So this is there is something called TDS. That is called tax deducted at source. Now, this is very much prevalent under the income tax, which will be studied in our next part of our this thing when we do income tax. So here also the government has introduced a TDS, but in a very limited fashion. Okay, so it is again an anti-evasion kind of a tax provision, where the supply, I mean, there's the person who is to whom the goods have been supplied, he is going to